Do we believe the market is going to move today on this news one way or the other?
I think that if it is interpreted as a positive sign for trade relations with China as Trump's general foreign relations, then that could be a real positive for the market. Not sure how much difference it will make purely for North Korea.
Okay, so just walk us through the way you're thinking about the China trade piece in relation to this discussion.
If you look at China trade, a number of companies noted tariffs on their fourth quarter earnings calls. And one of the biggest barriers to China trade has been Trump's negotiating stance. So I think the way to interpret this would be purely as a reflection of how Trump is negotiating with foreign powers. And
Jack, your sense, we were talking to Leland before in terms of President Xi's watching this, and Leland said he's got a bowl of popcorn. Does this help Trump's hand or hurt Trump's hand?
I think it helps Trump's hand in that he continues to emphasize that politics is personal, and that to the extent he can emphasize relationships that he can build, whether it's with, I have a great relationship with Chairman Xi, I'm developing a relationship with North Korea on a personal basis as a way to create avenues of growth and avenues of opportunity. I think it plays to where the president views his strengths as being. Whether that can turn into more concrete, verifiable programs and policies will be an interesting point. It certainly feels as though expectations have been dramatically lowered, either for what we will get out of this summit in Hanoi or what we might get out of a trade relationship in terms of China in the shorter term. I think, investing in markets come back to expectations. I think expectations have been pretty aggressively damped down over the past several weeks.
Leland, would you buy that? Does that make sense to you? This idea that the personal connection that he may or may not make with Kim Jong-un somehow then is going to get transferred to the relationship he may or may not have with President Xi?
I think what President Trump's trying to say is I'm a doer. So there's been a lot of threats out there, but now it's coming to the part where I'm going to start closing deals. I'm going to start doing things that my predecessors never could do and just didn't have the personality to do. So a lot of this is about him saying, there's been a lot of threats for the first year plus of my term. Now is when we get down to business, and here's where I start delivering on all the things that I said I could do and nobody else could do. So the more he shows progress in this, the more it seems.
But going back to the point that Jack made, expectations have been lowered. We thought it was sort of baked into the cake that there would be a deal of some sort, whether it was a photo op or something else, on March 1st. Then expectations were again sort of diminished in terms of what we ultimately get. What do you think the market ultimately expects? I mean, what are we expecting even at this point?
I think markets have rallied fairly dramatically over the past, call it 2 months, in terms of expectations of progress on a variety of fronts, whether it's geopolitical.
Expectations of progress or expectations that the bar has been lowered? Because I would say there's actually a difference.
I would say it's been a combination of the two. It has been, we're going to make progress politically. And whether that was we're going to have tariffs going into effect on March 1st, no. We're going to postpone them to be reworked at some point in time because we're making tremendous progress towards a deal of some kind. Whether it's we're going to make progress politically, we're going to continue like that. Whether it was progress made with the Federal Reserve in terms of I'm going to be cautious and I'm observing what's occurring on a global basis in economies in terms of adjusting monetary policy. So I think news got better. Policy expectations have been pushed out and in some senses reduced in terms of how much, how quickly. And that's allowed markets to rally. And so you've basically seen a nice improvement, say, in the P and the valuations and the expectations embedded more than you've seen, say, the reality actually be reflected on the ground.
Ellen, what are you telling your clients this morning?
If you look at what the expectations are in the market, back to the point of what expectations are, the last 3 months, you look at industrials, you look at industries in the S&P 500, and the highest performers over the last 3 months have been those that would benefit from a trade deal. So semi-cap equipment is up 13%, software is up 10%, cap goods is up 12%. So I think the market is already expecting that there's going to be some kind of a deal much better than what the market was expecting a few months ago. So I think that although expectations may have come down, the expectation in the market has already come back.
But then as a result of that, do you say to yourself, okay, it's now baked in and maybe even overbaked in terms of what those expectations are? Do you pile into those sectors that you just talked about? Or do you say, you know what, they've already gone on their run, I got to wait for a pullback?
typically you don't see 100% even when expectations are higher. So if there is a deal and if good news comes through, you'll still get a pop out of those sectors. So I would say it's not too late to own some of those. Having said that, though, if we look at expectations broadly for the U.S. economy and for earnings growth, the analyst estimates have come down for Q1, 2, and 3. Q1 is looking for 2.5% growth, Q2 and Q3 for 4 to 6% growth. But if you look at analyst estimates for fourth quarter, they haven't come down yet. They're still over 16%. So I think expectations are lower and perhaps beatable broadly in the market for the next couple of quarters, but we still do have the risk of estimate reductions in the fourth quarter. And then on top of that, we have the risk that the Fed is going to reverse course, particularly if the economic data stays strong. And if the market stays strong, as we learn now, the Fed's looking at financial conditions, the market.
Leland, I'm going to give you the final word, and I'm going to ask you this. If we think of Apple oftentimes as a proxy for China, if you're Tim Cook watching this today, what should you be thinking?
Well, you probably assume that the China deal is coming, but at the same time, this is not going to make any of your problems go away. Apple's got a lot of problems in the Chinese mainland that have nothing to do with trade. And so I would say that his problems abroad have just begun.